Welcome back to another schema scalpel video. Today's video we're going to be looking at when markets open imbalance. So imbalance means between the previous day's value area low, previous day's value area high. So I'm just going to go to a random point. Okay, not actually a random point, but yeah. So why I'm saying not actually a random point is because this is the close. Just go to the next candle. So this here is the close of this market. So this is where you would mark volume area high, and volume area low. So those are the two important reference points. I don't usually use POC just because it's not as reliable as volume area low, volume area high, or value area low, value area high, sorry. Let me just move this over to a proper explanation. So you can see we're still in replay mode, but we'll go through some actual examples in the chart. So we're looking at when it opens between value or inside value. So we would have, what can I use as an opening marker? Let's use an arrow. Let's say we open here, right? Which is similar to this on Friday, 20th of September. But I'll show you what's a bit different. So when we open inside, we looking for plays or directional moves inside this balance area. So from volume area high to volume area low, or from volume area low to, sorry, value area low to value area high. So it would be either this, like maybe dun, 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 bing, or, and now to copy. And let's see if I can do this. Select cursor. Cannot, no, I can't. Okay, I need to redraw this now. Just clone. Let's do this. Let's do it like that. Or we could have it move up to value area high and then hit it, go through a bit maybe, and then come down to value area low. So this is how, okay, let me just look that. Delete this. This is how we look at days that open with imbalance. So inside of balance. So value area high to value area low is a balance area. And when it opens inside of that balance area, this is how we look to get short or get long. You get long, get short from value area highs, or sorry, you get short from value area highs and you get long from value area lows. Obviously, that's accounting or adding in your actual entry criteria, things like that. But as for now, we're going to go through some examples. So let me delete all of this stuff. Delete all of this. Okay, so I just took Australian dollar futures. Okay, let me actually just add another one. Let's do, so 6. Let's do Canadian. No. Okay. Brazilian real. I don't know. It's super volatile from what I've heard. But just for the example, we're going to be using this. Okay, replay feature off. And now we're going to be going back. Random point. That is data. I'm seeing that the bar is also too big, so tick size, let's make that 1. Ew, my nose. Bit sick right now. Okay. My bad, my bad. So let's go to random day, August. Let's do this one. So we're only looking for examples where we open inside a value. Cut this off. That's value area low. So that's open outside of value. Value area low, open outside of value. Here we go. Here's an example where we opened inside of value. So we've got value area high. And then value area low. Okay. So let's do replay function. So obviously we saw what happened there, but we'll replay it on a smaller time frame. That's why I'm using the replay function. We don't really need this anymore, but we'll keep it on. Do 3 times speed. Okay, we open inside. Boom. We hit the value area low. We get the rejection. And now you see I'm ignoring the developing value area just because that's not as important and it's constantly moving for the day. That's why we use the static one, which is the previous day's value area. Boom, hits that. Now, because it did this quickly, we could even look for something like this, getting a bit more in detail, in depth. Something like this, in between, hitting this one again and then coming down. Or even hitting it multiple times. Boom, 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 and then coming down. And as the name suggests, this is a value area. Value area, value area. So sometimes it goes through a bit, sometimes it stops just before, but these are areas and not lines. Okay, let's go on. Oh, let's hide this one. Delete. Let me delete all of, oh my gosh. Let me delete all the drawings I just made. Let's play. So hit value area high. There we're going again. Now we can look to play and come down to value area low again. Okay, that's end of day. Now we've got a new value area. Okay, got a new value area. I'll just skip through until we have a day where it opens within. You see, it hasn't hit the value area low yet, but also hasn't come back to the high. So we're still within that value area range. Boom, it's the value area high again without reaching this low yet. Yeah, it continues down and hits the low. Okay. Now we're looking for another day. I'm just gonna 10x speed. Looking for another day where we open within value. Okay, I can't see that. I think this one might open within value. There we go. Oh, it did open, but it just shot out. Um, For the next example, I'll show you how to watch and how to play if it just shoots out the range like I just did now. Okay, open outside the value. That's open inside. Gosh, I missed it barely. Just because these two profiles were blended together. Not sure why, but they are. Oh, this one open inside value as well, and just gapped up. Okay, open inside, no bounce. Value area high, value area low. And just shot through this whole area, completely ignoring the point control. Does one more time, comes back to value area low. That one opens outside. Boom, opens outside. Open outside again. You see, because of the volatility of the real, there's a lot of openings outside. So let's actually look at something else. Just for example's sake, six pesos, New Zealand dollar. Okay, let's look at New Zealand dollar. I don't know what I'm going to see now, but we'll see it together. 30-minute chart. Okay, there's a lot more where it opens inside of value, and you can actually see it. Okay, cool. Actually, some really good examples. I'll just use this one now. Value area low, value area high, and these are areas, not lines. So sometimes they do push through it a bit and they cut back, but that's why you've got your risk to reward, you've got your entry models, all of those things to accompany you with the volume profile. You're not doing blind profile work. Okay, this one opens up, pushes through. Remember the bounce. Let's just remove all of this. And this is like textbook example. Like that. This was Friday that just passed as well, so it's also very recent. Just use this. We open inside, push down, push up, push down, get the value area, create a top. Now we have a second place where that could be an entry model, and then targeting value area low. Let's do that again. Let's see what else. Oh, 30-minute chart. Value area low, value area high. Go into 5-minute chart. It opens up here, pushes down into value area low, bounces there, comes back, small bounce over here, goes back, bounce, and then goes all the way through to value area high. So you can see this area, if you took an entry at value area low, you'd have been in a bit of heat. That's okay. It's only 13 pips and your target is 37. So you could have had easy 1 to 2 plus 3, or even 1 to 3. 39, yeah, 1 to 3 even. Just taking the value area low, seeing the range, calculating 1 to 3, and then taking that, yeah. Okay, let's see another example here. Let's go back to 30-minute chart. So we've got value area low, value area high. Going to 5-minute chart. Open, push up. You don't reach value area high yet. Push down. You reach value area low. Spend some time below. You break. And then you push up. So down here there could have been maybe an entry. Inside here there could have been an entry. On the way down there could have been an entry. If you look at the range, if we're just looking at like taking 1 to 3, the range of the value area is, oh, that's a large range, 72 pips. 72 pips range. If I'm doing long position, just taking an entry, a blind 1 to 3 risk reward. Oh, you might have gotten stopped out. Yeah, you've gotten stopped out on a blind 1 to 3 risk reward. But if you had entry models that were putting you in on this side of the V, because this is a kind of V formation, boom, boom. Let me do it like this. Boom, it's the bottom, and it goes up. So you want to enter there instead of entering here not knowing where to put the stop. So this would be correct. This would be a kind of wrong entry because here it bottoms out already. You don't know that for sure, but that's at least you know where to put your stop now. So then blind 1 to 3 would have gotten stopped out, but could have had a better entry model and then just work with it. Okay, back to 30-minute chart. Boom. This one opens outside, inside open, outside open, inside open, but we'll get more into this later. Inside open, hits this value area low, doesn't get all the way to value area high. Inside open, gets close to value area low, and then it gets all the way up to value area high. So that's basically all you're doing. There are more types or day types. I just look at this as like kind of day types. But type 1 is inside, stay inside day, and that is one of my plays. Enjoy the video, leave a comment, leave a like. Cheers, bye.